Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. Certain sectors are certainly doing better than others. Have higher energy prices boosted the Canadian dollar? You wouldn't want to be paying a natural gas bill in the Netherlands right now. Publisher of the Campbell Real Estate Timing Letter, Robert Campbell, checks in from San Diego. He tells us what's happening with the U.S. real estate market, mortgages, and whether the Evergrande real estate crisis in China could spill over to North America. Plus, at the end of the show, we'll have a company showcase update from American Manganese President Larry Reaugh. We'll talk to Ross Clark right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2 AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on Twitter at ChartsByRoss. Welcome back to the show, Ross.
Good to be back, Jim.
Ross, the major markets had a bumpy few weeks. Did they manage to recover by Friday?
Well, yes, recovery by Friday, but, if you take a look at it, it's midpoint of the decline. So, into a week ago, we were getting some early signs of market being oversold. Just the weekly charts, very, very small oversold signals. The NASDAQ was the only one, when we take a look at the dailies, that had produced just a significant signal for us. It's the daily chart there, because it was the weakest index that we keep an eye on, had generated a capitulation signal, and that's usually good for a 2 to 4 day bounce. Really expect to see a really quick one. It's a great trade for option traders. The options, we got the signal on Monday, and by Thursday, the call options were up 130%. So, it's one of those short-lived items. When opportunity knocks, you look to take advantage of it. But, overall, what you've had is that, you've had this group, the NDX 100, the top names in the NASDAQ, had been really leading us for an extended period of time. And as they have topped out and started to come under pressure, there's been a rotation. The energies, the financials have been holding up extremely well. If you take a look at the big names in the financials, like Berkshire Hathaway, J.P. Morgan, Bank of America, that index closed at new highs for the year. And you take a look at the energies, the U.S., the XLE, best level in this year. You look at on the Canadian side, the XEG and the items in there. Gosh, we're up 35% since the middle of August. So while some sectors are rolling over and consolidating, others are taking over the leadership. And this is much like 2000, when the dot-coms had that monstrous run, and then we spent the better part of 2000 into the first quarter of 01 just rolling sideways. And the different sectors like this would come to life, and it's pretty much the same groups. So if this is going to be a bit of a rolling top-up in here, which it looks like at this point it's developing, you take advantage of the swings. And we're really hoping that the seasonality here, which is that you would form an October-November low, that we'll get one more good hard sell-off in the next week or the next week to maybe month and a half that provides a good, really tradable low. So bit of patience needed as far as we're concerned, as far as the overall market is concerned, but trade the individual sectors as they jump out at you.
Are you surprised the Canadian dollar has surged?
Pleased to see it. We didn't get a divergence at the bottom, which is so common when the dollar starts to hold up relative to commodities but in this case, what you had was with oil pushing through $80 and the interest rate spreads between Canada and the U.S. really starting to favor Canada. It was a nice breakout here, and when you see the dollar at least agreeing with the strength we're seeing in the commodities, then you want to go with the flow. So the Canadian at this point now have to say that the trend is back up, and just buy the small pauses as they come. And with oil up over 80, or getting to 80. Might be starting to see excesses there, but my overall outlook is that 100 to 105 looks like a pretty reasonable target for the oil market.
I know Canadians are most likely looking at much higher natural gas bills this winter, but compare us to some places in Europe.
Oh, it's crazy. I mean, the price of natural gas in Europe. I mean, some of the stuff we've gone from. I don't know where the decimal point goes in this, but in the Netherlands, you've gone from 5.74 up to 39 in a span of 16 months in here. So, and some real exponential moves at the tail end of it. Even look at our price here. We're up to $7 just the other day. Starting to see some weekly exhaustion signals. So this will be the second time that we've had them on the run this year. It wouldn't be at all unusual to see a bit of a pause. And remember that the normal seasonal high for natural gas isn't out in the middle of the winter. It typically happens in late October into November. So it's going to take really, I think, an extended cold weather or a harsh one this winter to maybe push gas a lot higher than we've seen just now.
Ross, thank you so much for chatting with us.
Pleasure to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. You can find him on Twitter at ChartsByRoss. Coming up, Robert Campbell next on This Week in Money.
Always consult your investment professional before making any investment decision. Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. I'm speaking with Robert Campbell, author of Timing the Real Estate Market and the Campbell Real Estate Timing Letter. You can find it online at realestatetiming.com. He's speaking to us from beautiful San Diego. Bob, welcome back to This Week in Money.
Thank you very much.
Bob, when's the next Campbell Real Estate Timing Letter coming out?
It is coming out. I just put one out on September 15th. It's published every 2 months, so the next one will be November 15th.
So what's happening with your live events?
My live event's coming along real well. I have my first live event in over a year and a half. It's being held at the La Jolla Marriott on October 23rd. And interestingly, most of the time I have about anywhere between 50 and 75 people attending those live events. This time I'm probably going to have anywhere between about half that much. And what do I attribute it to? I think people are still weird about flying in airplanes and being at live events to some degree. The whole kind of thing has turned some people off, but I'm real happy to get it to kick-started again, to prime the pump, because I really, really love doing those events. And most of the people that go to those events are people that have been followers and subscribers of mine for 10 or 15 years or so, and I've got to know them all, and it's really satisfying getting to see these people. We're all super real with each other, none of this how to make $1 million in your spare time with no brains, no cash, no job, and a crappy credit score. None of that kind of stuff. It's all real world stuff. Most of the people are older. They know that nothing in life comes easy, but, they use that any advantage you can give yourself that you put to use is money well spent, and that's the way most people feel about attending my live events.
Inflation versus stagflation. What are you seeing?
Well, right now we're seeing inflation. Because the definition of stagflation, Jim, is you have inflation and a recession. We're not in a recession yet, but it certainly appears that that's the direction we're going. All the GDP estimates are way lower than they thought they would be. They're in the 1 to 2% range as opposed to the 6% range that they were forecasting, 6 to 9 months ago. And even the IMF came out today. I didn't get a chance to read the full report because their website was down, but I understand the IMF is forecasting a global depression. I can't believe that they would come out and say that, but that was the headline, and the guys that I follow, don't embellish the facts. So I think the next 1, 2, 3 years, I think they're going to be hard economic times.
Well, with that in mind, is there a way to offset that to secure yourself if we're headed for bad times?
Absolutely. And what everybody should understand about when you get into hard economic times, if you can just hold your own and not lose your money, Jim, you're a winner. Because most people can't do that. They can't even come close to doing that. So what I'm saying, if you can just hedge yourself, that let's say you're worth, just for example, $1 million before the recession hits, and after it's over you're still worth $1 million, you're a huge winner. Huge! Because most people get devastated by that. But what it appears is happening right now, at least here in the United States, we were heading into a recession. We had an inverted yield curve back in, I think it's 2018, 2019. We were heading into a recession, and then COVID hit. The U.S. housing market was heading into a decline. All my indicators were pointing things are going to get bad, and all of a sudden we hit COVID, and the U.S. government printed up $3 trillion worth of money and injected it into the system, and everything, the economy and the markets, took off like a jackrabbit. Well, I mean, you just can't keep, and what that has produced, of course, is inflation that's at, 10, 15, 20-year highs right now. So if we start heading into a recession and the government chooses to just inject more cash into it, we could be into a stagflation situation where there's no economic growth and prices keep going up, not only because they've injected more money into the system and we're not producing anything new, but also the bottlenecks in the supply chain. I mean, outside, here in my part of the world, I live in San Diego, but up in LA, that's a big port. I understand there's 70 container ships that are parked outside the port that are waiting their turn to get in line to get unloaded. There's nobody to unload the ships, Jim. You think that's going to restrict supply?
Is that from a labor shortage?
I think it's a labor shortage. Yes, they don't have enough men to unload the ships. And those containers, and they just can't bring them in and unload them. You would need the amount of space, the amount of containers that those ships carry. Once you unload them, you got to get them off the docks to make room for new ones.
And I believe that LA already has the most automated dock system in the world, where a lot of the trucks are robot trucks that move those containers around, but at some point humans have to get involved. So.
Oh yeah, well, I mean, eventually it's got to be put on a truck that hits the freeway somewhere. I mean, a lot of these guys, a lot of these truck drivers, they tend to be, pretty Wild West kind of guys, and a lot of them are refusing to get the vaccines, and the companies are saying, if you don't get the vaccines, we're not going to let you drive trucks. And they're saying, screw you. Then get little Susie Q from Subway to drive this truck. And so there's a shortage of truck drivers. Jim, it's all the way down the line. It's all the way down the line. Wherever you look at it, there's help wanted ads everywhere because a lot of people are not willing to do the work. One, that they're still making enough money to survive on unemployment benefits, and two, companies are saying that, look, it's get the jab. It's either the jab or the job, and people are giving them the middle finger and said, get somebody else to do the work. So these supply shortages, these are very real.
Is there room for wages to move higher to offset inflation?
No, that'll never happen. Well, right now, I mean, wages are up to $15, minimum wage here in the United States for doing anything. Go back 2 or 3 years, and we were still in the $12 to $13 range. That was a lot, that's a big, big jump. And even then, they can't get people to come to work. And all that's doing is adding to the cost, Jim. Adding to the cost. That all of a sudden you got to pay people $15 an hour. Are people is production increasing or decreasing? It's decreasing. So it's the old too much money, chasing a limited supply of goods, and that's what's driving in price inflation right now.
Mm-hmm. Well, in Britain they have a shortage of truck drivers because of Brexit. All the truck drivers from Eastern Europe left, and British workers won't drive trucks for that little money.
That sounds very much like in San Diego last year, they canceled the Parade of the Virgins. You know why? One girl got sick and the other one refused to march alone.
I was going to say, what virgins? Are the bond market...
Exactly. All this stuff, the whole world is in turmoil right now. And the government solution is to throw money at it. Throw money at it. Here in Los Angeles right now, the Nazis that run LA I've lived in California my whole life. So, and I'm still living here because there's a beautiful beach in front of me. Otherwise I wouldn't be here. But in LA, they're going to, shut down they're going to say, in order to go eat at a restaurant, you have to have a passport, a vaccine passport. They tried that in Moscow about 3 months ago. Putin. And the mandate lasted 3 weeks. You know why? Because people stopped going to the restaurants. And they said all the restaurants were going broke. And so if they're going to continue that, which they could do whatever they want. The only way the restaurants are going to stay in business is they continue these PPP, payroll protection programs to pay people, and that's all done with printed money. So in other words, if they continue with those kind of printed money operations, continue with that, you think inflation's bad now? Just wait. It's just going to get worse and worse and worse. There's huge consequences to printing money with, just printing money and pushing it out into the system. And essentially, even though the supply chain bottlenecks have a big part to do with it, a lot of it's too much money. There's just more money chasing a limited supply of goods, and we're having price inflation. Look at energy. I think by next year, and the indicators I'm looking at, we're going to, here in California, gas right now is $4.50 a gallon. Of course, we're really super high price. We have higher gas than I think any place in the country, except maybe Hawaii or something. But I predict by 2021, gas is going to get back to the $6 to $7 range. Because I know energy is going to keep going up. There's another thing, more supply constraints. Biden shut down that pipeline coming from Canada, right?
That's right.
Oh, you think that helps? No. Makes it worse. Real heavy dose of inflation, and I think it's going to be devastating to the average person. I just read a report the other day. It came out of the New York Post, and they're saying the foods for the average American family. And they cited a few anecdotal and cases, of course, like they do to humanize these reports. But they said there's one woman with 2 kids. She's saying that my food bill was $70 a week a year ago. Right now, it's $120. Same food. It's gone up $50 a week, $200 a month. That's just for food, Jim. That's going to start hitting people real hard. And you know where it's going to hurt? You know what's going to cause a recession? You can't do without food. You can't do without housing. I think rental costs in the United States increased like in the 8 to 9 to 10% range last year. Housing costs are appreciating at the fastest rate, in U.S. history right now. When it comes to housing, medical care, and food, and energy, people aren't going to have any money left over for anything, Jim. That's what's going to cause the recession. It's just going to be, you're just going to be lucky to get by on the essentials. That's what inflation does. And if we go into a recession, it's going to be devastating. It's going to be devastating to a lot of people. And if the government thinks they can just print money, to keep things afloat, inflation is just going to get worse. And that's what happened. That's what happened during the Vietnam War. That's how we financed it. We financed it with printed money and debt. And all of a sudden, inflation in the 70s averaged about 5 or 6%, which was very high. The U.S. dollar lost half its value, and then inflation peaked in the early 80s at 13 and 13.3%. And the Federal Reserve Board, Paul Volcker, had to raise interest rates up to 20% to stop inflation to save the U.S. dollar. We're not even, if you couldn't do that today. The U.S. government with all the debt and in most other countries as well, if you raise interest rates, the amount of money needed to service the government debt, the national debt, would double or triple. Where's that money going to come from? At some point you just get yourself in a corner right now, and that's how they've been able to finance since 1980 when interest rates were real high. That's how they've been able to finance all the increasing national debt all over the world, because interest rates have been in a steady downtrend. Mortgage rates in 1981 here in the United States were 18%. Now they're 3%. Interest rates, that the yield on U.S. Treasury bonds was 15%, and now it's like 2%. Well, gee, all of a sudden you can sure accumulate a lot more debt at 2% than you can 15%, right? And that's what they've done. They've taken full advantage of that, and they've just piled on the debt. They go, yeah, our debt servicing hasn't changed that much. Duh. Yeah, that's because interest rates are at 1,000-year lows. But in the meantime, all the pension funds, which is I think an $18 trillion company business here in the United States, they're all going broke because they're all getting like 1 or 2% on their money, and their payouts are based on a 7% return. Those are the next people that are going to get in trouble. Pretty soon they're going to have to bail out the pension funds. So you know what? That as you've heard me say many times, Jim. There's 3 law economic principles that have only 3 that have any value. One of which is there's no economic free lunch, and that's it. You just can't keep printing this money up without consequences. Pretty soon you're going to have to pay the piper. It's just who's going to pay the price.
Are the bond market and mortgages a concern?
Well, they've ticked up a little, but the government still has its quantitative easing. The Fed still has its quantitative easing programs going. Well, I think they're buying $120 billion worth of government bonds every month, and that helps put a lid on long-term interest rates. And of course, it's adding to the national debt. But in other words, it's kind of like the old saying, like what choice do you have, right? Would you rather go broke next year or next month? We choose next year. So we're going to keep these programs going until they're just, totally unsustainable.
As interest rates rise, what's gold likely to do?
Well, that's always, gold has always been a very, very manipulated commodity, because what's good for gold, when people have confidence in gold, that they've artificially suppressed that for a long time. And usually when interest rates go up, the dollar goes up and gold goes down. And so, that if interest rates start going up, that could be a negative for gold. However, what most people don't realize is that the price of gold doesn't take off because of interest rates or inflation. It takes off because of a lack of confidence in governments, Jim. And we got to be close to that. Does anybody trust the government anymore? No, not at all. Along with pharmaceutical industries or anything. It's just all a big corrupt, money-grabbing scam. And when everybody comes to the conclusion, the government just keeps adding to the national debt. They know they can't pay it off. People aren't going to, the Fed's buying all the stuff. What people do is they start turning in their cash and buying a gold because they trust gold because they don't trust the government. And they know it's going to get out of hand.
Could China's deepening property problems affect U.S. real estate?
It has to be. Surprising to most people that the interest that the amount of money that's coming out of China into the U.S. housing market has been declining for years. It started big, but year after year it keeps going down. Now with the housing market, crashing in China, there's less money to come in. In China, what I understand, I saw a statistic the other day, and don't quote me if I'm not perfect on this. The net worth of the average person in China, his net worth is 75% real estate. In the United States, it's 30. So if you have a crash of real estate, people are going to get devastated in China.
A lot of that real estate debt in China is held in U.S. dollars. Could that affect the U.S. dollar?
You know, everything affects the U.S. dollar. So many different things. I mean, the U.S. dollar is affected by so many things. It's very, very dynamic. But essentially, at some point in time, when you see gold take off, you know, it's not going to. It could be that the U.S. dollar is getting strong, but because everybody's bailing out of the Chinese yuan to get into the U.S. dollar or the euro or whatever. For some reason, they still trust the dollar more than they do any other currency because it's still the world reserve currency. However, if all of a sudden people lose faith in the government, that they can't keep law and order, that they're totally corrupt, that, you know, nobody wants anything, they don't trust them, that gold can take off on its own. It's just like a safe haven. I want gold.
What's the latest on the U.S. real estate market?
Oh, it's stronger than it's ever been in history. I think on the national basis, I think housing prices are appreciating at an 18, 19, 20% clip right now, year over year. You know what that means? That using the rule of 72, that means property values double in 3 years. Has that ever been close to being sustainable? Never, ever, ever. So I think we're getting to a point where it's going to be a giant blow-off. This is a housing bubble. No question about it. It's all driven by low interest rates and a lot of money floating around right now, but eventually things are going to get back to normal. You know, we're here in California, the average price, the median price home in California right now is $1 million. $1 million. That's ridiculous. I mean, you know, California real estate has always been high, but has it ever been that high? No, it's the highest ever by far. I think California real estate, I think it peaked out at like $600,000 back at the peak of the last housing bubble, and now it's over $1 million. Same in the United States. Housing prices have never, ever, ever been higher than they are right now. So there's no doubt in my mind this is a bubble, and the downside risk is huge. And in my September timing letter, I did some reversion to the mean analysis based on past real estate cycles going back, I think, to like the 1970s. And when things revert back to the mean, and it's been a very consistent pattern. Prices go up, prices go down. Prices go up, prices go down. Like people talk about inflation being transitory. Yeah. Booms are transitory, and so are busts. And so when this boom's over, by my calculations, and I was looking at California in general, not the United States. I think California housing prices are going to fall 40 to 50% when they correct back to the long-term norm.
Do you think the work from home genie can be put back in the bottle? And if it was, how could it affect real estate?
Well, that remains to be seen, and nobody knows the answer to that because we're all social animals, for one thing. Working from home doesn't satisfy that need. But you look at that, in a lot of places in the United States, the commercial real estate market, the rental market, is maybe off like 5 or 10%. But you go to major areas like Seattle or San Francisco or San Jose, it's off 20 to 25%, Jim. There's that kind of vacancy rate in downtown San Francisco, and prior to the pandemic hitting, you know, you go back in 2018, the vacancy rate in San Francisco City was 5%. Now it's 25%. Will people return? Who knows? Who knows? That's, maybe they like working at home. Maybe they're done with that urban crap, especially in San Francisco, where the homeless and the drug addiction is totally out of control.
Do the stock market seem to be climbing a wall of worry?
Yep, it sure does. Interestingly, that when you look at inflation hedges, the stock market's a better inflation hedge than real estate. It's, and you go back 100 years with the stock market, and I know that's, let's just look at long term. The stock market performs at about 5 to 6% above the rate of inflation, looking at it on a 100-year basis. Real estate in the United States is only about 1.5%. So the stock market's a better place for money. And that's why you're seeing a lot of money going there. That even if you have hard economic times, you still need major corporations to provide the goods and services that Americans require at whatever the cost. I mean, so sure, can the stock market crash? Yeah, but if you get into a highly inflationary market, and I've looked at highly inflationary markets, and I'm going to be talking about this at my seminar. You look at what happened in 1921 to 1923 in the Weimar hyperinflation. The stocks in Germany held their own. They didn't gain and they didn't lose. Was there a point to get out? Yeah. But while inflation was going off at 1,000,000% or whatever it was, so was the stock market. It was a good inflation hedge. It was much better than real estate because real estate's credit driven. When inflation's at 1,000% or whatever, 1,000,000, what are interest rates? What are mortgage rates? There are no mortgage rates because nobody's going to lend you money for more than one day. So there's no long-term mortgage, so real estate becomes a cash market. And gold, and when you get in high inflation, gold and silver do well too. Gold and silver, stocks, and commodities. The last thing you want to be is bonds, of course, because bonds get crushed. And interestingly, as far as wealth is concerned, you look at the net worth of let's say, the United States, maybe 3/4 of the total net worth of the United States in investment funds. It's not in real estate. It's not in the stock market. It's in the bond market. The bond market's huge. And those are the people that get crushed. And people that have savings. People that keep their money in the bank and things like that, in order to save for a rainy day. Well, the rainy day hits and their money's worthless.
We'll have more with Robert Campbell right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Robert Campbell. Bob, what are the underlying causes of the supply chain shortages?
It's labor. It's labor associated. All of a sudden, a lot of people are refusing to get vaccinated, and they can't fill the jobs. They can't fill the jobs. And now, for example, let's say I understand that flights going into New Zealand, which is one of the worst, totalitarian, countries in the world right now. They can't get. There's very few flights coming into New Zealand. You know why? Because the pilots aren't vaccinated. I mean, that's going to shut down the supply chain a little bit, huh? They're not taking mail to New Zealand with a boat. It's coming in by airplane. And speaking of that, okay, my book, Timing the Real Estate Market, it still sells real well. 2 years ago, when I would sell a book, via media mail from California to the East Coast, it would take a week to get there. Today it takes 2 weeks, Jim. 2 weeks. So just doubled your times for everything. Is that going to slow things down? You're damn right it's going to slow things down.
Do higher energy costs for oil and natural gas tend to be indicators of recession ahead?
Yes, absolutely. And looking at some other indicators, I'm going to be talking about this very closely, some other correlations with things that drives energy prices. I think energy prices are going to be continue to rise through 2022, higher than they are now. That's why I wouldn't be surprised to see $7 gasoline here in California. And as everybody knows, I mean, that high gas prices are a regressive tax. Everybody, I don't care whether you make $15 an hour or you make $150,000 a year. You got to drive to work, okay? And with $7 an hour gasoline, who's going to be impacted the worst? The guy making $15 an hour. He can't even afford to drive his friggin' car to work anymore.
Does it look like the powers that be are successfully choking out the economy with vaccine mandates?
Yes. I think they're doing a real good job. But what's interesting is that there is about, all the people that voted for Trump in the United States, and I don't mean like they like Trump because of Donald Trump. They're conservatives. Trump's a conservative. He's a businessman. He's not a politician. But there's about 80 million Americans, I think, that are holding the line right now on the vaccines and said, we're not getting the vaccine, period, under any circumstances. Well, and that the blacks are the most resistant of all. From what I understand, that as a group of people, more of them, a higher percentage of them are refusing the vaccine than anybody else, and so they're going to hold firm on that. Walmart. If you go into a Walmart, I would say at least 50% of the employees are black. All of a sudden, you say, like right now, look, no jab, no job to all these black people. Walmart's going to be out of business in 3 months. Who are you going to have run the Walmart? I mean, and so there's consequences to all this. I think we're closer to the end of this whole thing blowing over. I think we're in a transition period where the government's going to back off. They're going to back off because the whole economy is going to start crashing, and they're going to say, look, everybody back to work. I don't care if you've been vaccinated or not. I don't care if you have the flu or not. Just come to work. Keep the economy afloat. I think we're real close to that tipping point, Jim.
Do real estate prices today make sense when the economy is being destroyed?
They make sense. No, they don't make sense from the state of the economy. They make sense from the standpoint that interest rates have been manipulated so low, and there's so much money floating around that nobody goes broke. The government's just passing out money like crazy. They injected $3 trillion into the economy. I mean, just printed up money and injected it. I mean, how much increased goods and services were there? Zero. They paid people not to work. Like if you ran a business or something like that, and they said, okay, we're having trouble with our business. What's your payroll? Let's just say it's $100,000 a year. Here's $100,000, so you can keep paying people. They're not working. I don't care. Keep paying them. All that's money with no production. So in other words, you have constant or increasing demand with no added supply, and there's your formula for inflation. Pure and simple. Too much money chasing too few goods.
Are a large percentage of people now debt slaves, and what would they have to do to get out of debt?
Jim, I'll tell you a statistic that is going to blow your mind. And, I mean, I can't confirm this, but I got it from a good source, and it doesn't surprise me knowing what I didn't know. I'm a real estate economist, guys. For those guys that don't know who I am, and many of you don't, I got a degree in economics from UCLA back in 1969. I spent a lot more time at UCLA on the volleyball court than I ever did in the lecture hall. But it took me 30 years to figure out economics, and I'm decent at it nowadays. What's happening right now, the top 10% of all Americans are holding their own or doing well. The bottom 90% are not. A statistic I read the other day that just staggered me. America's believed to be that the most wealthy country in the world, right? Everybody, that just goes without saying, right? Do you know what the net worth of the average American person is at death? Jim, just take a guess.
$250,000.
Minus 60,000. They have credit card debt. They owe on their car. They probably can't even afford to bury themselves. And that's the bottom 90%. The upper 10%, they have all the money, they have all the wealth, and even the top 10%. I mean, some of those 10%, you got to be here in California. If you're not making $250,000 a year, you're going to have a hard time surviving. Super high housing costs, everything else is high. Super high taxes. State taxes are the highest in the country, and they want to raise them. Oh, here's another interesting thing, you guys. Here's what Biden wants to do. He wants to raise the capital gains taxes. Right now, capital gains, like state, federal and state here in California, there's no capital gains in California, and the top tax rate is 13.3%. So let's say the capital gains is something like 28%. Let's call it 30. So you go 30 and 13 is 43%. He wants to raise federal and state capital gains up to 57%. Jim, who wants to own a piece of real estate if all of a sudden you work your ass off and keep it well, and the risks are always there that you can make money or lose money? You're dealing with tenants that don't pay rent anymore and that can stay in the house forever, and then all of a sudden, if you're lucky to get out with a profit, you're going to get taxed at 57%. Who's going to do that? I mean, I've been around real estate my entire life. I was born on a building site. I I had a skill saw in my hand when I was 1 hour old. Who's going to do that anymore? Nobody. You got to be nuts. I think this is like, so in other words, I think the whole thing is coming to a head where people are just going to go, no. And why are they going to increase taxes? Because as Margaret Thatcher once said, socialism works great until you run out of other people's money. Guess what? We're out of other people's money. We're there. We're there, my friend.
Could the massive worldwide debt bubble spell the end of central banks?
That's a great question, and I can't answer that. You know, does the Federal Reserve serve a purpose? When it was originally designed, yes. It was made to bail out banks when they got in trouble. It's way beyond that. Way beyond that. So, I mean, now it's a political organization designed to make the rich richer.
Could we be looking at cash being king?
Well, I'll tell you, yes, there will become a time, but you got to be real nimble with that, everybody, because right now cash pays 0.1%. That's what 90-day T-bills are paying in the U.S., which is a cash equivalent. 0.1%. What's inflation? I mean, realistically, and not using what the government reports, which is totally understated, they're probably in the 8 to 10% range right now. So in other words, you have cash in the bank and you leave it there a year, you've just lost 8 to 10% of the purchasing power of your money. And you leave it there 2 years, you've lost 20%. So you got to get your money out of cash into something that can hold its own. And then when the time comes when, you know, the bottom falls out of things, and then move it from a highly appreciated asset back to cash, and so you can buy the highly appreciated asset back at a depressed price at some point in the future. That's the name of the game. Buy low, sell high. That's a golden rule of investing. So, but right now, I mean, to say like, oh, I'm in cash, you're getting your brains beat out. These are. That's one of the reasons I'm having this seminar right now. And don't think I have all the answers, but I certainly have more questions than most people will ever dare to ask. Like, oh, I'm keeping cash, waiting for the. How long this thing could go on? Another year or 2 or 3? Who knows? But when the correction comes, especially in real estate, which is my area of expertise, it's going to be a doozy. I promise you, it's going to be a doozy. And this is not just, you know, a prediction based on nothing. It's based on the simple principle that the second economic principle, only the number 2 economic principle that has any value, and that's all things in life return back to normal. Are housing prices at these levels normal? No. They couldn't be farther from normal. They're highly abnormal. I mean, you can't make a house in California, keep a house in California at $1 million and expect to have a functioning economy. No, you won't do that. How about these people that work at Walmart? What are they going to do? And rents are up 10% last year. They can't even afford rent. Do you know an average 1-bedroom apartment here in San Diego? It's $1,700. That's after taxes. So in other words, if you're a young kid making, you know, let's just say you're making $25,000-$30,000 a year. After taxes, you're making around, let's just say $20,000 a year after taxes, maybe 25. You're making $2,000 a month. $1,700 of that goes for a crappy 1-bedroom apartment in San Diego. Is that sustainable? No. That's why 52% of all the kids in California between the ages of 20 and 30 are still living at home. They can't afford to go out and rent something on their own. So in other words, and when you're some young guy that's raging on testosterone like we all are when we're in our 20s, and you got some girl, you meet some girl, you know, and you want to take her home, you're going to take her home to mom and dad. Is that fun? No, that's not fun. So it's not sustainable, Jim. It's way, way out of whack. You know, the richest people in the country have doubled their net worth in the last 12 months. Doubled. And the average guy is going down in flames. That's just the system. I mean, so in other words, you better get with the system and figure out how to save yourself somehow. But if you're a young person, you know that you think you have the American dream of owning a home in California. Oh, that dream's long gone, dude. Unless you're in technology or something where you're working for Facebook and you can come out of college, you know, starting with an average salary of $100 or $150. Even then, what's that going to buy in the Bay Area? Up in San Jose, the median price home is $1.6 million. In the city, it's $1.8. You can't even afford rent at $150,000 a year. up there. So, I mean, is that normal life? No, that's not normal life. And the rich are making out like bandits. And, you know, I'm just saying that's the way the world is. Is it going to stay like that? It's not. That's what happened during the 1920s. The inequality of the wealth gap between the rich and the poor was never greater in 1929. And we're even above that now. And what happened in 1929? The whole thing came apart. So I think we're ultimately, you know, to what degree nobody will know in advance, but we're looking at a huge economic and price correction in asset values. And the only thing I can do, what I do as a real estate timer, that all I can tell you is there's certain key indicators that you watch and which I focus on and which I present in my book. And those key indicators are existing home sales, new home building permits, notices of default, foreclosure sales, and interest rate. If you just keep your eye fixed on those on a month-to-month basis and convert that data into monthly trends, you will know what's coming 3 months before everybody else. And there's your lead time, guys. 3 months. Do you think anybody's going to tell you what's going to happen in 2 years? Yeah, they like to think they can tell you. Nobody has any idea. So in other words, when things start coming apart, those three indicators, like let's say we know we're highly overvalued, we're 30 to 40 to 50% above the long-term mean, and all of a sudden everything starts going negative. What would I do? I'd get out. Then you go to cash. And all of a sudden, that house you sold for $1 million, you'll be able to buy it back at $500,000 in 4 to 6 years. Don't think that people go, oh, I think things are going to crash and I'm going to buy back in a year. Year? Have you ever studied economic cycles? Nothing happens in a year in real estate. Real estate cycles are long. The up moves are long, the down moves are long. And typically the up moves are, you know, here in California, there's 6 years up, 6 years down. And I could show you a chart where I'm just not making those numbers up, and just look at them. Yeah, 6 up, 6 down, 6 up, 6 down, 6 up, 6 down. And that's why I called in 2018 that we were primed for a downturn, because that was the 6th year, but all of a sudden COVID hit, and instead of devastating the real estate market, it goosed it. So boy, when it hits, it's coming. It's coming. And to think it's going to be anybody that thinks it's going to be different this time, which they always do, you know, because they look at it from their own, they look at it from what they want to see, not from what they need to know. Well, I'm fully invested in real estate, and I don't think there's going to be much of a correction at all for this, and this reason. Bad reasons. You know, it's going to correct. Why? Because it always has. It's corrected, you know, during the last full cycles going back to 1970, there's been a move up and a move down. Why is it going to be different this time? Because you own a lot of real estate?
Are people waking up to just how important freedom is?
Yes, they are. You know what? And that's a great question. And they are, because when a lot of people nowadays, when they're presented with the choice, like either get a jab or lose your job, people are saying it's not worth it to me. You know, and it's either the way I look at things right now with the governments all over the world are trying to control. I mean, the U.S. Let's just talk about the U.S. as a Nazi leader too. He may be worse than we got going here in the States. But anyway, so all of a sudden they're looking at this, and my dad was a Marine in the Second World War that fought in the South Pacific. Why was he fighting in the South Pacific? It's either give me freedom or give me death. You're not going to take this country over. They were fighting for the freedom of this country. People right now, if they're presented with the situation like you have to get vaccinated, and they're saying, no, I'm not going to. Give me freedom, or I have the freedom to make my own choice, or give me death. And that's what they're going to do. They're going to stand their ground. And this could turn out to be a lot different than a lot of people think about it. A lot different. You know, that I'll tell you, there's a lot of people I know. Of course, I'm ex-military. I'm ex-Air Force pilot. But, you know, military guys are kind of a different breed than non-military types. But if somebody came up to me and said, I'm going to force you have to get this jab. I'm going to force you to get this jab. That, you know what, that's my self-preservation. They're threatening me, that they could be threatening me with a death sentence. And that's unacceptable. That's unacceptable to me. No, you're not. Oh, yes, we are. And now it turns into a situation, instead of a death sentence, you know what? you're going to make the world's going to know about you because you're going to stand your ground. You're going to fight for freedom. You're going to fight for freedom that made this country strong. And they think they're going to do something to you. You're going to do something to them. And that's what'll get the ball rolling, Jim. You can't force strong people to do something against their will that's constitutionally illegal. Constitutionally illegal. So, I think it's going to come to that. I mean, here I am. I'm 74 years old. I'm in great shape and everything. And, just hit a baseball 300 feet the other day. Oh, you got hardball. How many guys that my age do that? I just have kind of a macho attitude that nobody's going to do that to me. That I have a lot fewer years ahead of me than are behind me. Nobody's going to do that to me. And there's a lot of other ex-military, too, guys in the country. Go to the South in the United States. Go through the Midwest. Go through Wyoming, Montana. And tell those good old boys, you got to get the jab. You got to get the jab. Oh, yeah. You better duck because there's going to be a fist coming right at your head that'll probably knock it off if the guy hits you right enough. And I think there's 25% of the U.S. population that's in that camp, and they're going to stand their ground. And they should stand their ground. We're fighting for the freedom of our country right now. We're fighting for freedom, Jim. The right to make your own choices that are constitutionally given, that are given to you by the Constitution. You have the right to bear arms. You have the right to choose your own, what goes into your body, what goes out of your body. How about the right to vote? I mean, does your votes count anymore? No. Not here in the States. Everything's rigged. So this isn't going to end up with one world power controlling out of Europe or something, controlling the United States, Canada, Europe, Australia, and that. That ain't going to happen. Something will happen in between because every country has its own identity. They have their own culture, and the right kind of people will stand up for freedom and say, nope, we're not doing this. Not doing this, guys. Yes, we are. Over my dead body. And that's what it'll turn into. And that's kind of what it's coming down to right now.
Is now a good time to be a prepper?
Oh, absolutely. You have to be prepared. Look, you have to be prepared. I mean, like personally, I don't go overboard on this, but we have 90 days of food and water and a few other things. We can last 90 days. That's about 89 days more than most people can last. So, and most of the time, things will blow over in a short order. Within 90 days, things will return to normal. Even if you have chaos, all of a sudden things will return to some kind of normal. But I'm not going to have a bunker, an underground bunker somewhere with 2 years worth of dehydrated food in it. I'm not going to live my life like that. One, I'm not going to live in a bunker. I'm a beach guy. So, but you have to be prepared, and you have to be prepared. You got to protect yourself not only physically but financially. You got to move your money. If you want to be in the 10% that survives, you got to be active. You just can't sit there and say, please God, keep me wealthy, even though I have no idea what I'm doing and I'm stupid. No, God has better things to do at this time than help people that don't try to help themselves.
What's the latest in money versus health?
Oh, I got a quote for you guys. Let me get it. Got to see this. This is something I hope you guys will remember forever. Here it is. Being healthy and broke gives you more chances of success than having money and being sick. That's how important health is, guys. And I can tell you from firsthand experience. I am really super healthy. There's nothing wrong with me. I went and had a physical checkup yesterday, and my doctor looked at me and said, wow. He said, you are in such good shape. And when he left, he's like an old even though he's my Veterans Administration doctor. He said, Mr. Campbell, and he has a mask on. I had a mask on, so you have to be in there, but it was under my nose so I could breathe. He said, Mr. Campbell, can I shake your hand when I was leaving? I said, oh, I'm honored. He said, it's a pleasure being your doctor. And because he knows I'm so healthy and that kind of stuff, but health is everything, you guys. It is everything. If you don't have health, you have nothing. So don't work on making more money and being a better prepper. First, work on your health. One, when you're healthy and strong, that changes your whole attitude about life. You're more confident. You're more likely, people are more attracted to you, both women and females. You'll do better in business. Every aspect of your life will change for the better. And then you can add on to it after that. Like, I'm 72 years old, and I was always pretty good at baseball. Now I want to be in an over 65 hardball league. You know, guys that are in an over 65, half of them, most of them can't even think about playing baseball because they can't run. You can't run, you can't play baseball. And so I've been practicing, getting ready. The leagues are still shut down because of the virus crap. But eventually, I'm going to play in a league. And that's why I've been practicing, and I just hit a baseball off the left field fence that's 300 feet away. Why did I do that? Do you think that makes me feel good psychologically? It makes me feel like Superman, guys. It makes me feel like I'm invincible, even though I'm not. But, it's just that psychological edge. And I love the game. I love playing baseball, hitting the crap out of a baseball, hitting it 300 feet. That's, in major leagues, the left field fence is typically about 320 feet away. So I can't hit it over the left field fence yet, but I'm getting close. That's a long way to hit a ball if you're 74 years old. I know that. And I'm happy to be bragging about it, that I'm in good enough physical and emotional shape to be able to do that. And that's what it does being in shape. Eat right, exercise, keep your weight down, and it'll change your whole life. It'll change your whole life, guys. You can't believe how much of that, what success I've experienced in the world. And I'm not the richest guy in the world by any means, but I'm comfortable financially. I have a good business that I love. And we're doing just fine. But a lot of that has to do with being physically able to keep working and keep doing well. A lot of guys, when they get to past the age 65, they go, well, I'll keep working. Okay, in theory that sounds good. Something like 40 or 50% of all people past the age of 65, even though they need to keep working to maintain their lifestyle, to keep income coming in, they're unable to do so, Jim, because they're sick. They're unhealthy. So there's so many reasons to be healthy. So many reasons, and that even one of the commenters on my board that listened to me before, he said, Mr. Campbell, you own the line that health is my number one investment. And it always has been. It always has been since I've been a little kid. I've never been out of shape my whole life. I never let success, get to me where I'm saying, yeah, I'm doing really well financially. I can let my health go. Nope. That ain't going to happen. I played in a softball league, for 10 years when I was about, right around the age of, 35 and 45. And I was playing, and it was in a league. I was the oldest guy in the league, and I was the best player. So, just do something. And you do something, like I want to play baseball. Guys my age are playing pickleball. I didn't even know what pickleball was. So I Googled it, and it's played with a wiffle ball. A wiffle ball? I thought little kids played with a wiffle ball, which they do. Not anymore. Old people play with wiffle ball because that's all they can do. But I don't care what you do. Go out and play baseball. Do something that's physical. Go out and throw a football. Do something that's physical, that kind of, that separates you from everybody else because you can do it, and don't be limited by the fact that you say, like, well, I can't run because my knees hurt. I've had 2 surgeries. Yeah, I've had surgery on each of my knees as well. And I'm perfect because I rehab myself. I keep my legs strong so I can still run. But when you do stuff like that, guys, it changes your life. It changes your life. You just feel invigorated. You feel empowered. Nobody is gonna, get in your way if they stand in front of you and say, you have to do this. And you go, no, I don't. No, I don't. Look, I'm not the biggest guy in the world. I'm 5'11", 180 pounds. And I don't have much fat, and I've got a lot of muscle on me. But during this whole COVID thing, I've never had one person confront me about asking me if I'm vaccinated. Somebody asked me the other day, about 2 months ago. You know what I said? It's none of your business. That was the end of that conversation. That was one of my gym home buddies. None of your business. So, but all that kind of stuff, I'm just telling you, that's the secret of success, person. That's the first thing you should work on, is getting yourself in top physical shape, because that's going to affect you mentally, emotionally. It's going to improve all aspects of your life. And like that quote that I just read you, that I'm going to read you again because it's so important, being healthy and broke gives you more chances of success than having money and being sick. Guys my age, when I start to talk to them, they go, "What are you doing, Bob?" I said, "Yep, I'm practicing to be in a hardball league." "Yeah, I just hit the ball 300 feet the other day. Hit the crap out of it." And I said, "What have you been doing?" "Oh, I'm working on my real estate rentals." "Screw your real estate rentals. Who cares about that? You've been working on that for 50 years. Haven't you got something else to work on that's better, that you can brag about?" You're bragging about your real estate rentals. I don't even want to talk about my finances. I know you're comfortable financially, so am I. Let's talk about doing something that's empowering. Playing baseball or what else was it? There's something else that I've been doing. I forget, but I mean, that's really got me going now. I just can't believe that I can hit a baseball 300 feet at my age. I mean, that is so satisfying, guys. And I don't care what you do. I don't care what you do, but do something that's, don't whip out and start playing, waffle ball or pickleball or whatever, that kind of stuff. That's for old people. I got guys my age, and they say, "Bob, do you play golf?" I go, "No, I'm too young." They all laugh. They just go, they go, "Yeah, I know." They have to play golf because they can't do anything else. And I'm not saying that there's some things in life that can happen to you that'll keep you from playing baseball or football or whatever else it is. But you know what? There's so many things that you can overcome, and people don't try hard enough. They don't try hard enough. I've had weak ankles. I had to overcome weak ankles. I was rolling my ankles, running hills, spraining my ankle every 2 months, and you're worthless. So I started doing, my wife used to be a ballet dancer, and she told me how to do these, what called plie squats, and I did them for a year, and they strengthened my ankles. My ankles are perfect. My knees are perfect. My ankles are perfect. And I'm 4 years old. Hey, I age just like everybody else, but I maintain the equipment. You gotta maintain the equipment, guys. You have to. So that's how I feel about health.
In this day and age, how important is it to critically think?
Oh, it's absolutely important. Otherwise, to be able to look at data and draw your own conclusions. That's exactly what I do when I write my timing letter. It's 90% data driven. When I start writing my timing letter, which I do every 2 months, I spend the first 2 or 3 days doing one thing and one thing only, looking at the data before I start writing about it. Because you know what the data determines? What's happening in the markets. I don't start with a preconceived notion like real estate's going to crash, and then cherry pick the data to support what I want to say. It's just the opposite. Whatever the data says is what I go with. You know why? Because the data is a much better forecaster of what's going to happen in the future than what my brain thinks. And what your brain thinks is usually driven by your own self-interest. I'm fully invested in real estate. Are you going to, even if all the indicators start going red on you, are you going to be comfortable saying real estate's going to crash? You're going to be really uncomfortable. But you got to deal with reality, guys. Reality in the world is what controls. It doesn't matter what you want. It's what the collective masses want. And if they're all bailing out of real estate, you got to bail out. You got to bail out, and you got to bail out, in front of them, get ahead of them by about 3 months. Because once the word is out that real estate's in bad shape, and then you're selling into that, you're in a much worse position than if you knew that 3 months earlier and got out early.
Can older people build muscle?
Oh, absolutely. In fact, when I went into my doctor the other day, he hadn't seen me in a year. I was sitting there in the chair, and he looked at me, and he goes, "You've put on muscle." And I didn't even know it. Look, I've had an annual gym membership, guys, for almost 30 years. I missed a year because of COVID, because I refused to go in the gym and work out with a mask on. It's unhealthy. It's totally so I refused to do it. Well, my wife started telling me, she goes, that once things started loosening up, she goes, you need to start going to the gym. I said, "Why?" She goes, you're starting to look, you lost your muscle. So anyways, I went back to the gym, and I've been back to the gym like 5 or 6 months right now. And even the other day, when I told her what the doctor told me, she goes, "Absolutely." She said, "You took your shirt off the other day, and I could see it." She said, "You can see it in your shoulders, you can see it in your arms." She said, "You have a lot more muscle." So, you know what? But what you got to do, here's the secret, guys. You can't stop. It has to be a discipline. Then when I was in the gym working out the other day, and one of my friends came up to me and said, "Hey, how you doing, Bob?" I said, "Fine." He said, "Are you about done with your workout?" And I said, "No, I'm not." And he said, "How much longer do you have?" And I said, "About another 30 years. And he looked at me and said, "Exactly." You can't stop, guys. It's got to be like breathing. You just got to get going. You got to do it and do it and do it. You don't have to be extreme, but you just got to do it. I'm not trying to be the strongest guy in the world anymore. I dropped the weights about 30% about 3 or 4 years ago and just doing more reps right now. Even then, I'm putting on muscle. I'm trying to lose weight and I'm gaining weight, and it's all muscle. My pants are still falling off of me, so I guess that's okay. But, I mean, your body changes as you get older, and I wanted to be 175, and I weigh 185. But everybody tells me, even without a shirt off, you look great. So I guess I should go with that. You're always your own worst critic, and I never look at myself in the mirror. I don't. I just kind of, weigh myself now and then, because I just have the opinion that I'm working as hard as I'm doing as much as I can possibly do. I can't do any more. So it is what it is. And in my mind, whether it's true or not, I just say, I know I'm looking good. And so I don't want to look in the mirror and go, gee, you need to lose another 3 pounds off your gut, man. I don't want to say that. So am I trying? Yeah, I'm trying. But just don't look at yourself. Just keep working out. And you know how you can measure whether you're in shape or not? Okay, how do your pants fit? They're falling off. You're doing a good job. You're fine. Just keep that up.
How about leaving us with some wisdom?
I just did. About healthy. About being healthy. And I'll tell you the other wisdom that I have. I'm 74 years old, guys. And you know what happens in life? Whether you're Robert Campbell or anybody else, like even Warren Buffett. I love Warren Buffett's wisdom. He's been through the battles, through the cycles. He knows as well as anybody that nothing in life comes easy. Nothing in life comes easy. And you know how he came to that conclusion? Because he's 90 years old. He's been through the wars. My dad always used to say, who was a Marine, and he built homes in Southern California for 55 years. So, contractors tend to be pretty tough guys. As a group, they're not wimps. And he said, don't take advice from anybody that's under 50 years old, because they haven't had their head in the cement mixer enough times. That's about wisdom, guys. Listen to old people that tell you the truth, that don't have anything to sell you, and just sit around the fireplace and let's hear their experiences. And interestingly, what people underestimate, everybody talks about the winners. This guy made $1 million in real estate, or $10 million in real estate, or the stock market, or blah, blah, blah. For every guy that made $1 million, there's 5 that lost $1 million. They don't even talk about those guys. See, I'm willing to talk about those guys, going, nothing good in life comes easy, you guys. And that's why the average American ends up at death has a net worth of minus $60,000. What does that mean? That means being successful financially in life is easy or hard? It's really hard. It's really hard. But you gotta at least try. You gotta try. When I started practicing baseball, 6 months ago, I couldn't hit the ball 300 feet. I was lucky to hit it 200 feet. Now I'm hitting 300. Took me 6 months to hit the ball an extra 100 feet. But I did it. I'm doing it. So you gotta keep trying. Meet your goals. But is it easy? Nope. Not easy at all. Nothing's easy, guys. But you just gotta be tough. You gotta be tough. You gotta, if you're gonna go, you gotta go all the way. None of this, well, I'll give it a half-hearted try. Don't even try. Don't even try. It's not gonna work. It's not gonna work, so don't even try, but give it your all, go for it, and just keep going for it. And you have to adjust all the way. Charles Darwin is one of my favorite authors. Survival of the fittest. It's not the strongest or the smartest that survives and prospers, but he who most successfully adjusts to change. And there you have it, guys. There's your get-rich-quick success formula in a nutshell.
Bob, how can people find out more about your book, your newsletter, and your upcoming events? Okay,
they can go to my website, realestatetiming.com. Realestatetiming.com, just like it sounds. No dots or hyphens. They can read about my book. I have a blog that I post things on a blog about once a week or once every 10 days. And they can find out about my timing letter, and they can find out about my seminar that's coming up. So all those kind of things, and and you can learn a little bit more about me and the kind of things that I do. And I really appreciate you having me on your show again, Jim.
Thanks for being on This Week in Money.
Thank you very much. Bye.
My guest has been Robert Campbell, author of Timing the Real Estate Market and the Campbell Real Estate Timing Letter online at realestatetiming.com. He was speaking to us from San Diego. Our conversation took place on October 7th. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Robert Campbell, and thank you for listening. If you have any questions for the show or our guests, you can send them to info@howstreet.com. Now stand by for a company showcase update from American Manganese CEO and President Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the showcase, Larry.
Thank you, Jim.
Larry, you had a big news release this week about lithium. What can you tell us about it?
Well, we have a process that is taken from the leached portion of the cathode material, and it's run separately. And it's a green process. We call it green because it's comes from a green source. And we got 99.999% or 99% pure lithium sulfate from that recycling process. And this was done for a miner that mines lithium, but it certainly is not on their material. It's on our material, and but it does identify perhaps another source of income for our technology, and so we get high hopes for that. And it's with those kind of recoveries, we always got an efficiency of 99% on the extraction, and so it's another potential profit center. And it can be run separately. You can take that away from our process for making nickel, cobalt, and manganese, and leach it out separately, and then separate it separately. And so it's another piece of our puzzle that could our technology could have another source of income, and that's a long ways away, but it depends on what they want to do further down the line. Now, it's been a tough week. We have since we announced the placement of the $20 million. The stock has traded 34 million shares, and actually 60% of that was traded on the 20 million shares was traded on the first day, and that's a tremendous amount of volume, especially when it's down volume. And I think we had one up day in that, and the rest of it's been down. But I wouldn't worry about that because the whole ceremony of all this volume is that the predators account for 50 to 75% of the daily trading volume. And I doubt very much that there's a lot of change of ownership in that trading. But they didn't want to see that placement go through because they wanted to see us, especially if a bad market hits here, they wanted to see us going down to powder where they could cash in, tens, if not hundreds of millions of dollars in short profits. And so that that's fine. We can go down a few cents, but the truth of the matter is that we've got a clear path now to getting the first commercial plant up and going, and that should make the shareholders happy. I know they weren't happy with me making the announcement, but gee whiz, we did it just before October, and and October is a witching month. So, anything can happen in October, and I've had it happen. So, the management wouldn't be worth its powder if it didn't plan ahead. And we planned ahead some time ago, filed the shelf prospectus and had it ready to go, and it was taken down. And even though the stock was taken down to 90 cents, it was completed at $1, which shows a lot of belief in what we had to talk about in our due diligence. And so I think that these institutions, plus others, will start to become active in the stock if they're not already. With that kind of trading, 20 million shares on both markets in the first day, there had to actually be a lot of support out there from somebody and shareholders or whomever, because the stock didn't crush down like they wanted it to. So that said and done, I'll put that behind me. It's something we have to live with. I'm glad I recognized it 10 years ago, and I've written about it and everything else, because being able to recognize what the potential liabilities for the company are due to that type of trading, you're able to circumvent some of this stuff. So we're in good shape. The fact of the matter is that, if the stock goes down a few pennies, that is only a little bit of pain for a long-term gain. And, because now we're in a position to live through it and actually commercialize our plant, and that is paramount. So, it's basically, I'm not discouraged by the trading. I expected that there would be an attack on the stock, and I didn't know the timing on that, though, and, I couldn't actually, maybe I'd have been wrong. I hoped I was wrong. I hoped there wouldn't be an attack on the stock, but there was. And but you prepare for those sorts of things. Not only is the lithium press release a timely one, it also coincides with benchmarks reporting that the lithium has reached an all-time high. The EXW in China is close to $28,000 per tonne, and that was at the end of September. So if you look at an 80 gigawatt-hour gigafactory, that relates to about 64,000 tons of lithium, and so we could have a part of 64,000 tons going back into the batteries around during the next couple of years. And I know people want timelines. Timelines are impossible. The COVID has screwed up everything in our internal timelines, so I can't put timelines out because that's just a tool for the predators. And they say, I didn't make their timeline, and then they start spreading that around on the bull boards and the CEO boards and getting the shareholders all worked up. The thing is that the shareholders should be confident. If they're reading the releases and everything else, we are leading. And we've talked to a lot of groups that are quite staggered by the fact that we have what we have, and they talk to the other groups. So there's really, at this time, there's very little comparison between the two of them. So anyway, Jim, that's, we come out with a highlight press release. There's going to be progress reports here coming up very soon, and so it's going to be a great weekend. It's a long weekend here in Canada, the holiday on Monday, Thanksgiving, and so the Canadian markets will be closed, and so will our shop. And so, as I always say, we look forward to that long weekend when we're not plagued by the market, and because the market is a constant fight. It's not something that you do once and that's it. It's not once and done. It's every day. Every day you got to you encounter new situations in the market, whether it's an overall market or whether it's your market or whether it's a full-time job. It's a 24/7 job, and we have to do that. So, Jim, I wish you a very good Thanksgiving and my shareholders, and, I say, we got a little bit of short-term pain here for a very long-term gain.
Larry, for people new to American Manganese, what's the company all about?
American Manganese is a critical metals company that has got great projects in the metal field. One of them is the manganese in Arizona, where we completed a feasibility study or pre-feasibility study in 2012, only to be defeated by the price of the metal. And so it was on the shelf, but luckily we had done all that work and patented that process. And now it's in 2016, it was recognized that this may work on the cathode metals and the battery. Sounds simple, but there's a lot of technology involved in that. That's why it's a it's time-consuming and painstaking R&D. So now we're off to the races on recycling. We're doing work for the Department of Energy, or the Department of Defense, or the DLA, Defense Logistics Agency, in the U.S. That they are paying for, and we're hoping to extend that contract. It's almost complete. We're getting the final report ready for them, and it's a company that day in the sunshine has come in the most opportune time. And if you want to go to the website and read all our press releases, because we're very transparent about that, you can go to AmericanManganeseInc.com. There's a PowerPoint on there that gives you at least the goals of the company, if not a timeline. And to be honest with you, I think I was the first one to publish a timeline on molybdenum back in 2003 or 4, and we met that timeline, but we didn't have COVID at that time. And, we had an understanding of the metallurgy. There wasn't a lot of research to be done, and just drilling, and then basically the pre-feasibility study. So, and but you can also reach the company by going to sending me an email at LREAUGH@AMYMN.com. Or you can phone the company at 778-574-4444, and we trade on the Toronto Venture Exchange under the symbol AMY. We trade in the U.S. QB board under the symbol AMYZF, and we trade in Frankfurt under the symbol 2AM.
Larry, thank you so much for the update, and happy Thanksgiving.
Thank you.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on October 8th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.